Hi, my name's Craig West. I'm the CEO and founder of Succession Plus. We are the largest business succession and exit planning advisory firm in Australia. We've been working with business owners in the mid-market to help them maximise business value and achieve a successful exit for over 15 years. During that time, we've learned a lot, we've seen a lot, and hopefully we can share with you some of our experience, some of our knowledge, and the intellectual property we use to help business owners work through what is probably the most important focus area for an owner to work on. How do I maximize the value of my business and achieve a successful exit? Hopefully this webinar helps you understand some of those key issues you should be thinking about as an owner and helping you maximize the value of your business and achieve a successful exit. In today's session, we're going to talk about why the Peak Performance Trust, which is a special type of employee ownership trust, is the best employee share ownership plan for use by privately owned companies here in Australia. The Peak Performance Trust combines structured equity participation with performance-based funding, tax efficiency, and a robust governance model, making it the most comprehensive and also scalable solution for SMEs. What makes the PPT unique? There's a couple of key features. Firstly, it's a trust-based structure. Unlike direct share schemes or plans, the Peak Performance Trust uses a trust to hold shares on behalf of employees, which simplifies administration, preserves confidentiality, and protects the equity for you, the business, and the employees as well. The Peak Performance Trust is also unique because it's got performance-linked contributions. Equity is allocated based on both company performance benchmarks, which might be profit, and also by aligning employee rewards with business success. The trust deed outlines clear rules for eligibility, unit redemptions, dividend distributions, and that ensures both transparency but also flexibility. And ultimately, it's succession ready. The PPT enables stage exits for founders, preserving your legacy whilst transferring ownership gradually over time. Let's talk about how the PPT works. As I've said, the Peak Performance Trust is a trust structure. In this case, it's a unit trust, where each unit in the trust equals one share in the underlying company, the main asset. Shares are held by a corporate trustee on behalf of and for the benefit of employees. That ensures legal compliance and also centralised governance and administration. In terms of funding mechanisms, the PPT offers multiple flexible pathways, which can be used by employees to acquire equity. Firstly, the business or the owners can gift employees shares as performance incentives or quasi-bonuses. Additionally, under the tax rules, we can make a tax-exempt contribution to the plan, up to $1,000 annually per employee for everyone earning under $180,000. We can also have employees salary sacrifice into the plan, where an employee can contribute up to $5,000 per year, deferring tax until the exit or up to 15 years. Obviously, employees can also buy in, direct purchase at market value, and that could even be through an associate like a family trust. And finally, and often in our plans, we use some kind of profit share scheme, which is a type of earn-in, where the company contributes to the Peak Performance Trust based on a predefined formula. Often, that's a contribution of profit above a benchmark where the company makes a contribution. Let's say your company's profit target is $1 million. Any profit over and above that $1 million level is contributed into the employee share plan. Perhaps our formula says that we pay 20% of profits above $1 million into the plan. Obviously, as the business grows, makes money, and pays out profits, then the company pays dividends, and those dividends flow through the trust to our employees. The employees receive a cash payment proportional to the units that they hold in the trust. So if, for example, the Peak Performance Trust owns 2% of the shares and the company pays a $500,000 dividend, then the Peak Performance Trust receives $10,000 and that'll be paid out to those employees within the trust. At the other end of the spectrum, we've got to think about what happens if employees leave. Now, the first and most important point is employees can't keep the shares or take them with them. We don't want ex-employees to own equity in our business. And so we have a number of rules. The most obvious one is ex-employees are disqualified. They can't take the shares with them. What happens then is we need to determine on what basis did they leave. If they're a bad leaver, for example, they may well forfeit all rights to the redemption amount. And a bad leaver might be somebody who's terminated for cause, there's a breach of a non-compete clause, fraud, reputational damage, those sorts of things. Hopefully that doesn't occur too often. That leaves then good leavers. Good leavers are obviously retirees, somebody that leaves due to ill health or is made redundant. They're normally entitled to a full redemption of units. Also good leavers, but what we might call early leavers, are also disqualified, but they do get paid out. There's normally a disqualification discount. In other words, the earlier they leave, the less they receive. And that's on purpose. It's about the retention mechanism. Obviously, the longer you stay in the plan, the more equity you get, the higher your payout. We also need to think about governance and administration of the plan. For compliance with Tax Act, for updating employees, to ensure we're complying with the tax rules, and also as a mechanism to update and inform our employees about improvements and changes to the company value, how the company's performing, and what their shares are actually worth, we do an annual review on every plan. That is, we update the valuation using our capitalized platform and make sure every employee knows how many units they hold, what those units are worth, what the underlying assets worth, and overall holdings on their behalf. We then manage through our My Share Plan app, which is based on transparency and ease of access. Employees have a login to the My Share Plan app so they can actually see their holdings, get their tax statements, get information about the plan, receive offers, for example, and everything they need should be managed through that particular application. We own that product, and so therefore it's customized to suit both the Peak Performance Trust model and your individual business rules. Succession Plus provides ongoing support, compliance updates, and also strategic oversight on the plan, making recommendations as to how you can improve the plan and increase the value over a period of time. Obviously, one of the key benefits of the Peak Performance Trust is tax efficiency. Employer contributions are tax deductible, and employee share plans that comply with the rules are also exempt from fringe benefits tax. Most of our plans qualify under what's called Division 83A, and that simply means employees can benefit from deferred taxation. In other words, if I pay an employee a $20,000 bonus today, they'll be taxed on that in this year's tax return. If we pay a $20,000 bonus in shares into our complying Peak Performance Trust, the tax on that $20,000 can be deferred. And in fact, it can be deferred for up to 15 years. When the units are redeemed, redemption amounts are accessible income and capital gains tax may apply. Thanks for joining me for that session. I hope you found it really interesting and informative and hopefully helpful for you in your business. If you want to find out more, there's a stack of resources available on our website. That includes white papers, ebooks, and other webinars like the one you've just seen. Also, feel free to reach out. I've got a team of advisors who are experts in the various areas of business succession and exit planning. They're here to help you. Feel free to reach out, touch base with one of my team. I'm looking forward to being able to help you maximize the value of your business and achieve a successful exit.